All right. So now you now have a range from this high to this low. Okay. When you have a range from this high to this low, when you now start having bullish price action, trade into the premium of that range. Rather than waiting here to buy, you see, it all boils down to understanding your market structure. Internal structures cannot take out external structures on their own. So it is not your duty to buy from internal structure, hoping that an external structure will fail. This is an external structure. And the highs have been protected all the while. All right? You should understand that this bullish move is due to sellers taking profits. Or aside the fact that sellers are taking profits, it's also due to the fact that what price is trying to deliver into more premium prices so that we can have the sales. So that we can have the sales. So trying to buy everything from this low to this internal high, they are all internal structures. We don't have a valid demand there yet. I hope I'm communicating. For a demand to be valid, it must have led to a break of structure. The fact that there is an order block there doesn't mean that the demand is valid. The fact that there is a breaker block or there's a QMR, it doesn't mean there is a valid demand. So, in order for a demand to be valid, it must have what? Led to a break of structure. Now, within this recent leg of bearish structure, there's no valid demand. So you now start having internal what? Order flow. Now, these highs that are being taken out, they are internal highs. So I can't expect something like this to buy from here to go and take out this high. It will not work. If price does not on its own break the external structure, then you start engaging. If you engage from internal structures to take out external structures, you will most likely take a loss. I'm doing my best to communicate it as smoothly as possible so that you guys can understand this. So, if your protected high has not been broken, you don't have a break of structure. If your external liquidity has not been broken, you still don't have a break of structure. What you have are internal breaks of structure that do not in any way affect the overall trend of the market. How do I mean? If price has pulled back, like this, all these breaks of structure, BOS, it does not affect the entire trend of the market. If this external liquidity is broken, lower, that tells you that sellers remain in control and there has been a new continuation break of structure to the downside, because what is happening is that we are now continuing the established order flow. Order flow is not something complex. Order flow basically means the matching of buyers and sellers' orders. That is what order flow is. So don't let anybody use grammar to confuse you when we say institutional order flow. Because in SMC, we believe that institutions control price. So everything revolves around institutions. The way Christianity is founded on the belief that Jesus Christ is the Son of God who came to die for the sins of the whole world is the same way SMC believes that institutions, not algorithm, institutions control price. You see, there are some other trading methods. Aha, the criminal has sent a request. You go sleep there. Admit ke. So there are other trading methods that believe in algorithm, whatever their methodology is founded upon. What it is founded upon now becomes the basis for their approach, the basis for their trading, the basis for their analysis in the market. So basically, in SMC, I said, not only do we believe that institutions control price, we have a way of identifying institutional movement. That is by manipulation and expansion. So if the institutions want to move upwards, there is going to be a manipulation and then there's going to be an expansion. If the institutions want to move downwards, there is going to be a manipulation and there's going to be an expansion. So what we are looking for as SMC traders, first of all, in identifying our structure, in identifying our order flow, in identifying our liquidity, and in identifying our POI, the foundation of SMC analysis, or the foundation of analysis in SMC, is identifying institutional movement so that we can trade the footprints of these institutions. We are not here to say this is where price is going, this is how long it will take for price to get there. We are here to understand what is price doing and how can we tag along. So in SMC, we tag along with the institutions. Now, we need to understand where institutions have moved. And as far as this structure that I have on my screen is concerned, the most recent point of institutional movement is this high right here. This high is the most recent point of what? Institutional price action. Because that high sponsored the manipulation and also sponsored what? An expansion. That is why we recognize this as our most recent leg of institutional movement. So that now tells us that this is our external high, which is protected. This is our external low, which is what? Targeted. Everything that goes on between the external high and the external low, they are internal liquidity. Now, this is what is peculiar to internal structures. Every external structure is a strong high or a strong low. So if a high is external, it's strong. If a low is external, it is strong. Okay? But within the internal structures, you can also have strong highs and strong lows. Within those internal structures, you can have strong highs and strong lows. So let me show you what I mean. Now, if this is my leg of structure, this is my external high, and this is my external low, and anything that is going on between the external high and the external low is internal structure, then let me show you how you can have strong highs and strong lows inside of your what? Internal structures. So when price begins to deliver efficiently, giving you the same order flow, we have what? Internal to external, or from buy side, from sell side to buy side. Okay? So price is giving you what? Efficient delivery. We are having stop hunt, expansion, stop hunt, expansion, stop hunt, expansion. These are not regular pullbacks. You see, this is different from where you have Let me see how I can clone this, right? Good. Now, this is different from when you have something like this. Price is just mitigating levels of what? Demand and supply. Price is just mitigating. In order to save myself the confusion, I call this what? Pullbacks. I just call them regular pullbacks. You see, these are also pullbacks, of course, because price just came to mitigate something, break, mitigate, break. But in this case, price is taking liquidity, mitigating, and breaking internal structure. Taking liquidity, mitigating, and breaking internal structure. In the second case, price is not taking any liquidity. So when you see price is not taking liquidity, what is happening is that price is engineering trend line liquidity that can be targeted in the future. Now, in this case scenario, you now know that because there is sell side liquidity here that can be targeted in the future, this supply will likely be respected because it has something to target. You see, recently I was looking at the work of one of my senior colleagues, and she said, before you place a trade, you must have an objective. And that is one of the most important aspects of the way we trade. You must have your objective. I have established that liquidity is the main attraction of price. When price is buying, price is attracted to buy side liquidity. When price is selling, price is attracted to sell side liquidity. What conveys price from one point of liquidity to another is what you now call your point of interest. And there are different points of interest. Fundamentally, all points of interest are either support, resistance, or support to resistance flip, or resistance to support flip. So it is either that there is support or resistance there, or there is a flip from support to resistance or resistance to support. I'm not adding demand and supply now. In this case, they are different things, but within this context, I just want you to understand, okay? I don't want to make it too lengthy. Support, demand, resistance, supply. For the purpose of this explanation, it should mean the same thing to you. Just so that if I have a leg of structure, maybe I have something like this, then I identify this as my liquidity. What has happened here is that there was a demand here or support that has been broken. So when a support is broken, the market will likely test it as resistance. So this support, S to R, this support to resistance flip zone will now become my POI because that is what is closest to my liquidity. I will ignore the other blocks here. I will ignore the QMR here. But this that looks like a mitigation block, forget about the name. Whether it's a mitigation block, whether it's a breaker block, what is happening is that either demand has been disrespected to become supply or supply has been disrespected to become demand. Either way, once you have identified your liquidity, the closest zone of demand to supply flip or supply to demand flip or demand or supply. All right. These are the four cases these are the all your POI, all POI that exist on the chart. They fall into these four categories. It's either a demand or it's a supply. Otherwise, it's a demand to supply flip zone or it's a supply to demand flip zone. This every POI, be it fair value gap, be it IFVG, be it MB, be it violation blocks, be it service blocks, be it Goldman's blocks, whatever kind of POI exists on the chart, fundamentally, if you take them apart, you find out that there is either demand or supply or a flip zone. That is the engineering inside of any POI. It is either demand, supply, or a flip zone. There's nothing more than that. So you have to first of all understand that it is your liquidity that price is attracted to. So if price has come to take this liquidity, price is now ready to sell. The POI is just the icing on the cake. It's not about the POI. So when you now have internal structures here, don't start marking a demand from here because you saw order block. Don't start marking supply because you saw order block within internal structures. Having broken this down, we'll now go back into Euro USD. I want to explain things that happened on Euro USD this week. So everything that is happening between your external high and your external low, they are internal structures. Your external high is a strong high. All right. So all external highs or lows are strong highs and lows, but not all strong highs and lows are external. Hey, what's Godman saying? This is a strong low. It swept liquidity. It broke internal structure. This is a strong low. It swept liquidity. It broke internal structure. This is a strong low. It swept liquidity. It broke internal structure. Is it an external structure? No. It is still happening within the range of this high and this low. So this low as a strong low, is it breaking an external high? It is not breaking an external high. It is breaking an internal high. That is why it is an internal structure. It is breaking an internal high. That is why it is an internal structure. It is breaking an internal high. That is why it is an internal what? Structure. But where these things now come to play is that if this strong low is broken, look at this. This is a bearish leg, and price has been giving us effective delivery. Once the last point of a strong low is broken, price will usually clear the rest and clear everything down to the sell side liquidity. So once a strong low is broken, don't even bother to go and catch the next strong low or to go and catch the extreme. Price will usually sell and clear everything because every strong low is taking liquidity from the previous internal range. So for it to have taken liquidity, there is no more liquidity below. So don't look at it as say price is taking this low as some form of liquidity to continue the buy. Price can only use this low as liquidity if an external structure was broken. So when price prints this strong low and it takes out an external structure, that is the only case scenario where price can induce it. Let me show you what I'm talking about. Let me delete this. So if we are having those strong lows, price is printing those strong lows. I'm just going to do it really big so that we can. Then price is printing those strong lows, right? Then that strong low takes out that external structure that was protected. It is only in this scenario that price can induce this level for continuation. And that is what a few, I've seen a few people call it inducement liquidity. It's not inducement liquidity. There's nothing like inducement liquidity. Price can now trade beyond this strong low and resume the buys. Price can break a strong low and resume the buys only when that strong low took external liquidity. So if that strong low only broke internal high and price now break it, that is an automatic reversal. What am I trying to say again? Meaning that before price took this external liquidity, we had the strong low. If the strong low is broken, if that strong low is broken, that tells you that this entire leg from this low to the new strong high that was printed, there's no valid demand. So even if you come and wait at the extreme here, my brother, you go still chop SL. 8 out of 10 times, you go chop SL. The only way you can be safe is that you wait for confirmation. In this case, you have to wait for a confirmation. So price has to pull into a level of demand And that level of demand has to tell you that me, as a level of demand, I am valid. How will a level of demand tell you that it is valid? It is going to lead to a break of structure. You are going to get a break of structure. Please make sure you are taking notes. I I don't think I'm going to release this video to the public. It's recorded, but it's strictly going to be for my private students. There's too much information here. There's too much information here. I'm not going to be releasing this to the public. It's going to be for my private students. Now, so when the demand has showed you that it is valid by leading to a break of structure, it is this new demand that was printed here now that will now become your engagement. You can now start buying from this demand to go and clear the highs that fail to take out the low. This is this external high. You can now buy from there to go and take it out. So that statement I made, I said if a high on the 1 hour has not taken out a low on the 1 hour, no matter how many bearish break of structure you have to the downside, price remains bullish. We'll still get back to that statement. I know it confused a lot of you. We'll get back to that statement. Now, the same way I was explaining. So when you see price giving you efficient delivery, it's taking liquidity, breaking structure, taking liquidity, breaking structure. There is a likelihood that your supply will be invalidated because this is a new leg of swing structure being printed, sweep, break, sweep, break. And when you have multiple recent structures facing the same direction, you have a swing structure. So for this your supply, for this your existing supply to be valid, you need to wait for that strong low to be broken. Then you can now get in with your inducement, your POI, you can now sell to clear the entire low. With your full chest, you can do that. Now, having established that, we've been able to talk about internal structures, your actual external structures, then strong lows or strong highs within your internal structures and how you can trade them. So when price, oh, I forgot to add, right? But of course, you should already be able to deduce it from that, even without adding. So if price is giving you those internal strong lows, right? If price is giving you those internal strong lows, they will be protected until external liquidity has been taken. If external liquidity, which is this high, right? If external liquidity, which is this high, has not been taken, these lows will remain what? Protected. If price now protects this high and we have a confirmation break to the downside to tell us that sellers are still what? They are still in control. So we have a break of structure to the downside. Now price starts giving you this same internal strong highs. They will be protected. They must be protected if price is going to remain bearish until external liquidity, which is this overall low, has been broken. If external liquidity has not been broken, price cannot induce an internal strong high for continuation. It will not work. Once the last point of internal strong high is broken to the upside, that is a clear reversal. So once you are having strong highs and strong lows as internal structure, if any one of them is broken, it's a reversal. So long as we are still operating within the context of an external high and an external low, if a strong high or a strong low is broken to the opposite direction, take it as a reversal. If you have questions, you can indicate in the chat box before we go into the market and look at Euro USD. So, but in the case where you are just having normal pullbacks with mitigations, you can confidently sell from this supply because you know there is a sell side liquidity to target, which is this trend line liquidity that has accumulated. And of course, price will now go for the major liquidity, which is this what? External liquidity for the bearish leg. The same thing applies to what? To a bullish case scenario. So probably just need to invert your chart if you drew that out to understand the bullish scenario. As expected, Euro USD is dropping. Now, you see everything that happened here, everything that happened here, it doesn't affect the trend of Euro USD. This is our high. This is our low. Every other thing is internal structure. Yes, I said so. So if you now come here and start buying, because you saw this impulsive move, you mark stop hunt, you mark BOS, you look for what? Demand here and start buying. Price will likely take you out. Yes, we can sell from the supply confidently where there is no efficient delivery of price. Eddie, I like your question. We can sell because that will mean that price has just been mitigating and continuing to the upside. When you have multiple mitigations, there is an accumulation of trend line liquidity. I teach my students to trade towards the trend line. We trade and target the trend line as liquidity. I'm going to use USD JPY as that example. There are some trades we executed on USD JPY in the last couple of weeks that clearly state it out. Clearly, yeah, even on GBP USD. Now, before we go ahead, I was hoping that price will still take out this high. I was hoping that price can induce this high so that we can trade deeper into this POI for the sales. I understand that we already tapped it, but it wasn't a clean mitigation. All right. So I still believe that price can take out this high and then sell. I still believe that price can do that. Why am I not looking at this high to be induced? Because this is relative equal highs. Is it possible? Yes. But if price should trade above this high, I'm going to be looking at it as a bullish BOS. So that even if price, without taking this external high, comes back into the demand, I'll just look for an inducement so that price can take it out and buy back to the upside. But I will explain that along the line. Now, first of all, let's go back to the structural leg. Let's look at the order flow. Let's identify what price is doing. So let's go to the 1 hour time frame. And let's identify where we are having breaks of structure, where we are having order flow. What is our order flow saying? So where is the highest point that price got to before we resume the sales? This is the highest point that price got to before we started selling. So this is our what? Our swing high. So let's look into the chart and observe the order flow. So we had a stop hunt. We had a break of structure. We had a stop hunt. We had a break of structure. So you can see price is doing what? Internal, external, internal, external. All right? Or from buy side to sell side. Okay? Again, price took this. Buy side, broke what? Lower, sell side. Again, price took this. Buy side, even engineered high as buy side, then did what? Broke what? Lower, sell side. Broke lower, sell side. Again, this high took this as what? Buy side, and then broke what? Lower, sell side. So this is our most recent leg of institutional price action. And of course, anywhere there's institutional price action, you are going to see impulsive move away from the zone to show you that truly there was introduction of liquidity at an institutional level. So this was a stop hunt, and then this was a break of structure. And like I said, this becomes our external liquidity or our external high or whatever you can call it so that you can easily remember this becomes our external liquidity, external li liquidity or high. But fundamentally, you understand that because the trend is currently bearish, it is protected. Then this becomes our external liquidity, which is what? Targeted. So this becomes our external low or our external. So this becomes our external low or liquidity, which is what? Targeted. Fundamentally, or basically, it is targeted. Now, Since we understand that we are now working within the context of this high and this low, everything here has not broken structure. If you like, oh, if you see first, second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10, all of them, 10 BOS to the upside. Oga, you don't have a break of structure. All you have are internal breaks of structure, or what art calls stop hunts. Yeah, internal break of structure or stop hunt. They don't affect the overall trend of this market. When this low is broken, we have a continuation BOS. When this high is broken, we have a what? A change of character. I hope that is clear. Please respond in the chat box. This thing I'm giving you guys for free. I'm not going to drop any recording. So please note, sit down, use your phone to screen record, write on your notes, whatever you need to do it so that you don't forget it. This is going to guide you in price. All right. Now, also, to make things easy for you, you can plot your range too. Thank you. Thank you, Captives. Or is it Captain Easy or Captives? But thank you. Thank you very much. So you can plot your range too. Now, the reason why I don't expect price to trade beyond this high is because this high has done something significant. Now, in the model that we trade, in the way that I trade, first of all, I want to see one side of the liquidity taken. When one side of the liquidity has been taken, then I want to see a new order flow that suggests to me that price is on the way to take the next liquidity so I can now engage. So this high on Friday took internal range liquidity, and that is exactly why price did not induce Friday high on Monday. Price could have as well done that because after taking internal liquidity, price can still engineer liquidity. But you now see that Friday, price failed to, before price closed, price failed to actually induce that New York high. Okay, that 4 p.m. high, price failed to induce it. So it sold lower on Sunday. On Monday by 3 a.m., price came back there. So there was like an accumulation of resistance. Let's go to 30 minutes. You are going to see price came into the zone 3 times. This was the resistance that was created. First touch, second touch, third touch. Look at that. So the third touch that even came in took out what? That Monday Asian high. So this is Monday Asian high, and it was taking out 7 a.m., which is almost, it's still Asian session, because London session is 8 a.m. Nigerian time, and I'm using UTC +1, which is Nigerian time. So 7 a.m. Asian session, the high of the week was printed. The high of the week was printed Asian session on Monday, and price was protecting Friday high. So this is Friday high being protected. On Monday, we had a stop hunt and a break of structure. So Asian session gave us a strong high. Are you following? On Friday, we took internal range liquidity from the most recent leg of bearish structure. We took internal range liquidity. On Monday, Asian session gave us a strong high, but this strong high is an internal structure. Okay? But you can now see why price is respecting it, because it's an internal structure, but it's a strong high. It swept liquidity and it broke internal structure to the downside. So we have a lower high here, which is a strong high. So that means if price is breaking this high, price cannot use, because you see, this is our external high. This PUI from here is still within this external high and this external low. So this is still an internal supply. Okay? So that is why a strong high cannot be used as inducement by internal strong highs cannot be induced by internal structures. So I cannot, in any right sense of mind, be looking for this strong high to be induced and be marking supply from here to sell. Okay? If this strong high fails, that is as good as saying price will break what? This external high. Because this strong high has, as it stands right now, it has partially mitigated this POI. This strong high has the same strength with this external high. They have the same strength because it was printed after price took internal range liquidity. You see, you need to understand that the price cycle says that if I'm going to sell, I want to see a manipulation of buy-side liquidity first before the expansion to the downside. So buy-side liquidity has been manipulated here. So if buy-side liquidity has been manipulated and the order flow has switched, this strong high sponsored a BOS to the downside, confirming a switch in order flow. Now, this was also a strong low because it swept liquidity and it broke structure. This will now tell you why I sold from where I sold. So we had a strong high here, we had a strong low here. We had an external high here, we had an external low here. So this external low printed a strong low to tell you that, oh, demand is not ready to give up. And by the time we came into the supply, this external high printed a strong high to tell you that just as stubborn as the demand is, supply is also stubborn. So supply is also not ready to give up. So it's a battle between demand and supply. This is what I like to call a demand and supply sandwich. So we are caught in between demand and supply. Price is bouncing off support and resistance level, which tells you that on this supply here, this supply, this supply, this supply, what does that tell you? There's resistance. This demand, this demand, this demand, this demand, this demand, what does that tell you? Support. So we had resistance, we had support. So we had an internal BOS here. This was the last point of strong low. And what do you see happen to that strong low? Support was breached. Okay, so the support was breached. Now, this is a strong low that was broken. I told you that strong lows cannot be induced. Strong lows cannot be induced. So those people who had come here to catch demand from here, there was a very clean order block on the 45-minute time frame. Yes, this is the order block. Very clean. So those people who had come here to catch demand, they will now be surprised. Why did their trade now later go against them? And in as much as price was reacting from this demand, why did I tell you guys to sell from this POI yesterday? So why did I tell you guys to sell from this POI yesterday? Even though I didn't get in on the trade because I was so sleepy, immediately after the session, I slept off. Immediately, I didn't even waste 2 minutes. I just climbed the bed and I slept off. I was so sleepy. I was sleeping off during the session. So why did I tell you guys to sell from here? What happened? What did I see? Why was I sure that price traded too deep into this POI? Maybe because it was in the midnight. Oh, that was Asian session, 6:15. I don't know why price traded too deep into the POI, but then it's fine. So what happened? What did I see? This is where we had a break of structure. So supply is in control. Now, again, not only did we have this break of structure, okay, this strong low was broken. This strong low was broken. You can see that price breached the strong low. It was just by a week, but nonetheless, a strong low was breached. The strong low that should have been protected as internal structure, it was breached. So even by a week, if a strong low or a strong high, if an internal strong low or an internal strong high is breached, even by a week, consider it as a failure of that strong high or strong low. So that tells me that look at this struggle that price had here. That tells me that supply got in here. That tells me that supply got in at this point, and the supply that got in at this point took out this strong low. That tells me that there's a strong supply here. And what do you see? Accumulation of what? Resistance, minor resistance liquidity. That was also a pullback. I saw this as my liquidity. Of course, price took that out, tapped into the supply, and sold off. Now, price sold off and failed to clear our major liquidity by less than 0.3 pips. That was about 0.2 pips. On some broker, it's 0.1 pip. But fundamentally, price did not clear it. So you are not going to treat it as a break of structure. Price did not even sweep it. That tells you that this low is still an internal low. And not only is this an internal low now, it is resting on relative equal lows. Those lows are now equal. So this demand here is now a dangerous demand to be looking for buy. Why is it a dangerous demand to be looking for buy? Because of the large liquidity pool that is sitting below it. SMC trading. Nobody is really going to tell you all these things about structure. But SMC trading is logical thinking. If there is liquidity that hasn't been manipulated, and I have a POI sitting like a waiting duck that is waiting to be slaughtered by the hunter, or sitting ducks waiting to be slaughtered, your POI there is a sitting duck that is waiting to be slaughtered. Now, why would I focus on selling? There's also resistance liquidity here. So, but what is different about it? This strong high, that is what is different about this resistance liquidity. This high took liquidity, this high took liquidity and broke structure. Even at that, without this high being induced, for that sales, I will not just take a limit from there like this. I won't take a limit. I need to see an inducement so that I will be convinced that price wants to respect this POI because there is resistance above it. Price can easily decide to buy because for the sheer fact that we fail to take this low, that means price is protecting it. And since this high failed to take out this low, there's every possibility that this low will reject price to go and take out this high and give us a bullish break of structure to the upside, which will now become a change of character if we are looking at it on that 1 hour time frame. Guys, am I communicating? Please indicate in the chat box if I'm communicating. You see, if you're a Christian on this stream, pray. Pray. God can actually teach a man. I honestly didn't learn any of this from a mentorship. I honestly did not learn any of this. I was well taught by a very reputable SMC trader. He's possibly the best SMC. He's the best SMC trader that I know. Of all the traders I know, he's the best. Traditional SMC. But I didn't learn these things from his mentorship. After learning from him, you see, your mentor can teach you the language of the market. After your mentor has taught you the language of the market will now begin to relate with you. That is when true light comes. When true light comes, understanding will be unlocked. So let's go. Okay, it's the Euro USD we're breaking down. So basically, this recording is only available to my private students, please. I'm not going to put it out there in the public. There's too much here. There's too much here. So I would not be looking at this. Okay, I'll be looking at this to be induced deeper into the POI. So during Asian session, it can still sell. I mean, 2 a.m., 3 a.m., whatever, it can still sell. Right? We can still get that sell. So price can now drop. So where is your range? Where is your range? What's your current range that you are working with? Since this high to this low now becomes your structural range, it's now your structural range because there are multiple ranges within these internal structures. So you just connect your most recent high and your most recent low. So where's your most recent high? Where's your most recent low? This is your most recent high. This is your what? Recent low. So by the time you connect your recent high and recent low, where are you? Premium. What do you need to see? There's no structural liquidity. We have stop hunt, we have BOS. Okay. So this is also another what? Second BOS. So we have push, we have pullback, we have push. Price has taken internal. Price can also what? Engineer liquidity. Okay, because there's no inducement close to that POI, and we can now sell off to go and clear what? The relative equal lows. So this is what I'm seeing on Euro USD. Okay. We also have to be wary that there has been multiple mitigations of this what? Resistance. And the fact that price did not clear this low, price might just be coming to buy and take out this high. All right. So personally, I would prefer to see confirmation. What's my confirmation? I want to see this high taking and then we break lower. So once we break lower, I look for continuation to sell. So basically, if I'm going to engage that, I'm going to be engaging with a confirmation. Simply because of the resistance liquidity that is resting above that POI. So that's going to be the end of this session. I hope you guys have learned one or two things that you can apply to your trading.